Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, I had some dreams that I had some good trading today, so I'm hopeful. Hold on, I need to adjust my speakers here. Actually, to be honest, I'm not sure I'm going to be taking trades today. The market has just been so batty with the whole debt ceiling, and yesterday, like, I thought it was bad. Well, it was streaming. Oh man, like, the day just got weirder and weirder. Let's come to the charts. All right, now we're ready. So here you had the treasuries, flight to safety in the treasuries, and actually a little bit more today, and we're back below 3.7. And here you got the equities, big downsides. Now the thing is that there was not like any like key headline where things started going south or anything like that. It seems like, though, that the market just did not like what was going on with debt negotiations. You really need to see like an agreement within the next 2 or 3 days, and they're still very far apart. And so I believe that may be why the market is starting to panic. Oil is to the upside. Interesting. So let's come to copper next. Copper is not. So we're getting mixed signals on global growth. Gold and silver moving higher with the rest of the interest rate complex. The dollar, well, that's Bitcoin. The dollar continuing to get strong, able to spike up above 103.5 this morning, and Bitcoin giving up those gains. I said I'm a little skeptical of this move. Of course, it came back down. So cool. So yeah, I read this interesting story on Zero Hedge that was summarizing the Goldman economists, and they were basically saying that like the combination between equities, the dollar, and treasuries is not running the way that it should if we're running into a recession. And they believe basically that equities are wrong and that the dollar is right. So kind of, so the dollar continuing to move up is kind of like maybe a bad omen, if we say that, right? All right, well, I'm a lot much better. Do I sound better to you guys today? I think I sound a little bit better. I'm not completely perfect, but maybe after we've been speaking for a little while, my nose will maybe drain a bit and I will sound better. But I think we should be good to do something to record a video this weekend finally. Oh, I better start sweeping, cleaning up that script. I tried doing some work to start getting into the Republican primary today. Supposedly, Rick DeSantis is going to announce his run for president, and he's going to do it on Twitter in a live space with Elon Musk, apparently. So that, sorry, am I getting his name wrong? I don't know. It's just DeSantis. Ron DeSantis. What did I say? Rick. Oh, you know what? Okay, listen. Here's the thing. I come over here. Okay, here's Ron DeSantis. I mean, now they don't look similar or anything, but like they seem kind of familiar to me. You know what I mean? I feel like that Rick DeSantis is kind of like Rick Perry. It is kind of like this he's got like this I won't need to look like I'm in charge and be tough and this and that sort of a thing. But when you kind of lift off the facade, like there's no personality there. I kind of feel like they're the same guy. So I think in my mind, I'm mixing them up. I don't know. So I've been doing a lot of research. You want to see some of the interesting things that I've been pulling out about this? Oh, I love this. Ron DeSantis has a problem. It's Florida. Did you see this story where the NAACP was like issuing a warning to minorities against traveling in Florida? And it's like the president of the NAACP lives in Florida. So like if it's not safe for minorities there, why do you live there? The whole thing is they're working overtime to try and make Florida look bad because they're concerned that Ron DeSantis is the only person that can actually beat Joe Biden, right? Like the conventional thinking among the Beltway is that Ron DeSantis is the only one with the name recognition and popularity at this point to beat Donald Trump. And if he can beat Donald Trump and be the nominee, then he'll probably beat Biden. But if it's Trump again, Biden might be able to beat him. That's what they think. And so everything in the media right now is targeted towards trying to make Florida look like it's like, 1942 Germany. It's just ridiculous, right? Okay, but DeSantis has his problems. Let me show you. So this page right here, this is going to become, during the Republican primary, your favorite page because it shows you the RCP average for the Republican presidential nomination. And so interesting right here, notice that since about March 27th, I think it is, we've seen Donald Trump move up and DeSantis move down. What happened around March 29th? Well, here's a story. March 23rd. DeSantis walks back territorial dispute remark on Ukraine. There's kind of a lag in this data series. So I could see March 23rd, DeSantis starts walking back and having this issue on Ukraine. And then his popularity goes down. That kind of interesting, right? Isn't that interesting? There might be something else involved. I don't know. But then you notice also that the kind of the upstarts are kind of starting to do a little bit better. What could be causing the selling on treasuries? I'm not really sure. It started at an odd, it started on the open, like the pit open, it came out. So probably what's happening is these guys are out there saying, well, interest rates need to be higher. We need to be like 3.75, 3.8, something like that. That's like what the economic conditions suggest. And why are we where we're at? Because of fear on the debt ceiling, right? So for me, I think that I would like to be short treasuries, long interest rates. But I kind of got screwed on that one yesterday, right? And I don't know if there's any meetings or what is going on that front today. And I thought that I knew what was going on yesterday, and I didn't, and I almost got screwed. So I'm not saying I'm not going to take a trade, but I'm going to be very cautious. If I do one, I'm going to need to get a good price. So I'm probably not going to come in with my live account and sell 19. House Republicans are deal-making newbies, and that could be a problem, reports the Politico. What do you think about sector rotation? Is it something? Okay, so sector rotation is absolutely a thing. You can absolutely use the information that you have about the markets to predict which sectors things are going to move to. That said, it's like one of the hardest games to play. I don't think I've been very good at it, the whole sector rotation thing. Because like you'll say, okay, we think that there's going to be a shift in the macroeconomic picture, and that is going to result in money moving into this sector. And then you do that and you get the macroeconomic projections right, and the sectors don't move the way that that you thought. And this happens all the effing time. Not to mention that you're constantly shifting. So it's a very exhausting game. I mean, that's what a lot of hedge funds do. That's the way that Jim Cramer basically played the game. So a lot of what he was doing was really sector rotation, but you know, he had other advantages too to be able to play that game. She better mention the Denver Nuggets win. What? Are the Nuggets? You know what? I don't pay attention to sports anymore. Something that I find really odd about myself is my reaction to the whole culture war sort of thing. Because if you've been watching this long enough, you can see that I really hate wokeism. I despise it. I want the world and our society to become more successful. I want people to become more prosperous. I want the world to be better for my children than it was for me. And so everything that I do is geared towards helping build things up and build the economy. And I believe that wokeism is the exact opposite of that. It is about trying to tear down and destroy society, and so that they can usurp power and turn it into something new. Define woke. Woke is a sorry, I'm searching for the word here. Wokeism is a focus on creating social equity at the expense of traditional liberal values. So we will so somebody that is woke, yeah, identity before meritocracy. I think it's a little bit broader than that, but identity before meritocracy is probably the thing that bothers me the most, right? But you know, so somebody that's woke will say that we should absolutely prosecute somebody's speech because it hurts minorities or something like that, right? If we can find that whatever it is that the person is doing is harmful to minorities, regardless of whether or not they have a constitutional right to do it, they should be stopped. That's wokeism, right? But more broadly, I believe that wokeism is really like a communist ideology injected into the West. Yeah, it really is like it's kind of crazy that there's not more discussion about that fact. I think that the left just doesn't want to have that discussion. But the people that pushed all of this stuff to begin with, they're all communists, man. They're all communists. Okay. So I hate wokeism. Now, since that time, all sorts of things will come up where wokeism is a thing, and or a wokeism destroys a thing, like the NFL. Like when we came in and people were kneeling during the national anthem and things like this, or like the Bud Light thing, right? And you would think that I would be like, oh yeah, let's boycott it. I'm super gung-ho about it, this and that, and all those other sorts of things. And like, I just don't care. I just don't care. And yet at the same time, I just lose interest in those things on my own, right? So like, there was a time where I was like, oh, I should get into football. I was, as a kid, we would always watch basketball, and now I just don't care. I'm constantly looking for things to like, novel things to keep my ADHD at bay, sort of a thing. And sports would probably be something that you could get it. I just can't get myself to care anymore, man. So it's not like the wokeism gets injected into it and I'm so mad, so I boycott this thing that I like, to hit it to those woke DEI corporate folks or what. No, it's just like, once it gets injected into an area of society, it's not interesting anymore. I lose interest in it. The more identities you can intersect, the more. Well, it really is like the thing that I think is really scary about it is this whole idea that like we need to tear down the existing power structures in order for there to be social justice, right? It's like this, it's almost like a tit for tat sort of a thing. And like, look, that's never historically how it goes. Okay. French Revolution is I think such a good example, because we all identify with the values of the French Revolution. Like generally speaking, we as Americans agree with the ideas that triggered the French Revolution, right? But the reality is that it was complete chaos for decades and decades after the French Revolution. And there were periods during that mess where people were even more oppressed than they were under the monarchy, right? It never works out that way. What happens is you just get somebody else that gets put into power, and they're very often worse. When you come in and you undermine and tear down a society, like at its like base social roots, it does not result in a better society. It doesn't. Change kind of has to be gradual, is one thing. Because people need that culture. Humans need like that responsibility, purpose, belonging, etc. And if you come in and you destroy that for a large number of people, the result is always disaster. And see, what has happened is the communists have realized that the culture is a huge impediment to their supposed revolution. And so they've learned that what they have to do is they have to come in and undermine the culture of a country or whatever it is in order to make it communist, right? And Russia was pushing that for a long time. They kind of went away, but the communists in the United States that they were kind of like supporting and creating, still here and latched onto this intersectionality. That's why we call it a mind virus, right? That's how people were replacing the identity prior. Well, yeah, the thing that is so here's the good news about the whole woke thing. Okay, it's gonna fail. It's already kind of failed. This is like the point. Like okay, good comparison would be the anti-war movement in the 60s and 70s, right? So like the anti-war movement was like a big deal. It was like at school, they would do school walkouts to protest the war, and like everything was like, peace and all this, the concerts, we all know the culture thing, right? And then one day, like, it just disappeared, right? And the thing is the point at which the anti-war movement was falling apart was the point at which it seemed the loudest, where it was like the thing that you would be focused on, that the news would be talking about the most and things like that. Like it's happening as it becomes the main cultural issue. It's already falling apart, and until one day you realize that, oh, what happened to all that? It just kind of disappeared. It's already happening. And it's inevitable that it will happen, because we live in a society that is based on freedom. Like meritocracy is great and everything, okay? But really what America is founded on is freedom. And meritocracy is just like a natural consequence of freedom, right? Because like there's lots of inefficiencies and problems in our system today, but our system optimizes for freedom, right? And so the inevitable consequence is that people who adopt these crazy ideologies that are frankly ineffective will never be able to compete on the cultural scale and eventually disappear. Next is going to be AI. Robots have feeling. No. I mean, I have to think it has to. I know a lot of Democrats, but don't know any woke people. Woke seems exceedingly popular online in colleges, but it's not common. Yeah. Well, probably because you're going to be visiting places where you're talking to adults. And I think that the most woke people are like younger than 24 years old. Yeah. For sure. I was at a friend's house and got to chat with the gaggle Zoomers, and even they don't seem to be in. Well, it probably is one of those things where like a very small minority of people is like really, really loud. Dude. As a parent, it's so effing hard. So like, I wonder if my allergies are flaring up again, because my eyes are watering a little bit more today than they usually do. So one of the things that I have learned is that you can latch on to something or an idea, even when it's like harmful to you, like people will say, well, why would I choose to believe X thing about myself when it causes me so much pain? Well, the brain does stupid things like that. That's why. The things that will generate dopamine and chemicals in your brain are not always necessarily positive feelings, right? This is why depression is a thing. Right? So when I see something like that developing among my children, right, your natural inclination as a parent is you want to come in and like crush it. You know what I mean? Make a big deal, crush it. Like I want to, my autistic 3-year-old, we want to potty train him. Okay. So if I take him to go to the bathroom, he doesn't want to go to the bathroom. I start making a big deal out of it, like that's like the worst thing he can do. Because then he's just gonna like become even more strongly, oh no, I don't want to go to the bathroom. Then you have a real problem, right? No, the thing is, you just ignore it. You know, let him forget about it for 2 weeks straight. You know, because you don't want to start reinforcing that brain pathway that's bad for them. You know. So sometimes I'll see these sorts of things among my kids. And you can't just come in and like slam it down and like, oh, you can't be hanging out with them with this person or be talking about this thing that's like super bad and be like all authoritarian about it. It doesn't help. You kind of just like, you kind of have to ignore it and find ways to subtly guide them in the way that's successful and hope that they're smart enough to figure it out, that when they could go into the successful things, that gives them a better reinforcement and they go that way. You know what I mean? So one of the things that happened was my oldest, he was hangs out with the LGBT kids, and basically none of the LGBT kids are actually like gay or anything like that. They're all they're all what I would call queer, which is to say like they're a girl and they will be in relationships with boys, but they claim that they're trans. So everything about their relationship is a heterosexual relationship, but they're trans. So the relationship is actually gay, but there's nothing about it that's gay, but it's queer. That's why they have that word queer in the LGBTQ, right? And this one girl who was trouble, man. This one girl was trouble, man. I could just written all over him. And like I'm studying these people, you know, I stalk them. Totally don't. I hope Ever doesn't watch this stream. I totally stalk the kids. Okay. Everything that they're doing. And she was posting on antinatalism, like the subreddit antinatalism. Quality out of context clip there. No, I cannot think of a single place on the internet today that I find more disturbing than the antinatalism subreddit. The people that post there are absolutely crazy. Basically people that think that like you shouldn't have children. They're nuts. Oh man. But I did the right thing. I ignored it. We didn't make a big deal out of it. She you know, things they eventually went their own way, and since then she's kind of like done she's kind of undermined that relationship. So you don't have to do anything. I think I'm Seth's parenting tips. I think the secret is you don't have to come out and like be adamantly against something, but instead what you can do is you can use what they're dealing with to you know, strategically adjust what you talk about so that it will subtly help them, guide them in the directions that will be more successful for them. I guess I kind of try and do it on the stream too. I've been trying to move that way. It's actually kind of a weird thing because we're about to go and do the opposite of that, right? I'm gonna make a video that is kind of like, here are the problems with here are the problems with volume profile, or let's not call it volume profile because it's really auction theory. Here's the problems with auction theory. Here's the problems with smart money concepts. We're going to make videos about that, but more broadly speaking, especially when we're here on the stream, it's got to be more like, okay, so if somebody comes in and they're like price action trading, I come in and I say, well, you're dumb for trying to do price action trading. Doesn't work. It never convinces them. And I could come in and show them all the stats. Doesn't convince them, man. Doesn't convince them. So I have to try and be more subtle about it. It's kind of like, oh, well, look, we're informed traders. Here are all these advantages to informed trading. And they watch it and they go, oh, this is like way better than this price action shit. Either ignore it or hyperactively support it to the point where you mimic it and then the kids think it's lame. I've seen that one. I don't know if that would actually work. No. It's like why would because I remember there was a Reddit thread about this and I was like, nah. I think that if I did it, I don't think that the kids would believe me, you know? Like they would just see it as a manipulation tactic. I think if I did it. So I thought there was this TikTok the other day. And the person was saying, you know, like a lot of youth today have trouble with online safety, and their millennial parents will tell them all of these things about online safety, and the kids are just like, oh, that's lame, you don't know what you're talking about, whatever, right? Because the parents aren't these are the Gen Z, these are the kids that grew up with the social media. They know what's going on the internet. You're old people, you don't. Okay, well, I was there when the words were what is the frickin' meme from The Lion, Witch, and Wardrobe? I was there, and my kids, I'm like an insane level computer geek, right? So like there's no way that sorry, I skipped a part. So me trying to pretend that I'm not the internet expert and that taking advice from the kid, that's what their recommendation was. So you'd ask them, oh, okay, so what can you do for online safety? And then the kids would tell you, and then that would reinforce it in their mind, and they go out and they do it. It would never work for me because my kids know that I know freaking everything on the internet and they don't know shit. Wouldn't work for me. Is this live trading or guiding kids on forums? Well, there's a lot of parallels. There are. Because really what it comes down to, and really what the subject of the day so far has been at heart, is how does your worldview affect your success? And how can you actively adjust your own worldview to help lead you to more success, and to help the people around you, to help lead the people around you to more success, right? This is very relevant to trading. If you are a quote unquote woke, I cannot see where's the streamer where there's some trans girl super woke sitting here doing live trading on YouTube and having success with it, right? You're not going to see it. That person probably not going to be very successful at trading because it's like what we're saying. There are things in the worldview that are undermining them, right? See, the woke mind virus wants you to be out there protesting and being an activist so that you can undermine the system for them. They don't want you out there being successful and just like fixing things on your own, because then you can't help them undermine the system, right? Does that make me based? I don't know. luckily I'm small enough I can just say what I want, right? So it's kind of interesting that we had that sell on the open, but like it's come right back to the middle of that and has just kind of been doing nothing. I did briefly hear some McCarthy headline, but nothing's really going on. Oh, here's something I missed. Your Bank of England to raise its main interest rate 3 more times to 5.25% by September. Brannigan Barrett, there will never be a greater teacher than experience itself. Yes, because the brain learns by doing. Especially if it's like a physical thing. Joseph Wang, update to my favorite debt ceiling measure. FHLB, DNs, and bills both assumed to be credit risk free, but DNs usually have slightly higher yields since they are less, quote, risk free. Except during debt ceilings, pricing seems to increasingly suggest that this will be resolved within a month. I highly doubt that they get to like, a week past June and they don't do anything, like this situation where like it just continues to be a problem over, for like the whole month. Probably not going to happen, right? Gosh dang it, Uzi. Uzi did create the out of context clip. I'm not gonna lie, one of the main drivers behind getting this tower of a rack mount set up that I've got over here is so that I can make my own PF Sense box and have even more insight into what's going on my network. Yes, kids, I know what you've been viewing online. Very disappointed. What's this? Goldman Sachs Mea culpa on its commodities forecast and the Bank of England's miss on UK inflation show the current models aren't working. Who'd want to be an oil price forecaster? Well, oil has been doing all sorts of bizarre things lately, hasn't it? I'm not quite sure what to make of oil most days anymore. We don't have, sorry, let me come back here. Yeah, we don't really have any news today. This is, I tell you what, no news Wednesdays can be the scariest, right? Because those are the ones that are really like, it's either just completely dead or a monster trend appears out of nowhere. Yeah, the 5-year actually ticked. Well, they're actually pushing the bottom of the range. They might be breaking out to the downside. Okay, so McCarthy is talking to somebody. He said that he has spoken to White House negotiators today. I do not like Discord's new message request system because it hides the requests from me. I never see them until it's like days later. And too many people, listen guys, I am like really available. Okay, if you message me on Discord, I will usually respond, but you gotta start with something more than hi. You come in and you say hi and you expect to like small talk for, you know, a few messages back and forth, and then you're gonna ask me your question. Like, that's not gonna work. Like, just start with your question in the first message. It saves us time. If you just say hi, I usually ignore those. Well, as we say that, it goes right back up into the other side of the range. It's a wider range than usual, but it does look pretty stuck. Or around the time that we could see a move, right? Like, if they were really out there to sell it, they could be doing it here right now. But hard to be gung-ho about any kind of trade given the situation. Let's go and check Reddit. They've had interesting things on Reddit lately for the day trading stuff. Return of a 1,725% in 1.5 months. What am I doing wrong? You've got to be doing something. Oh, disclaimer, this is paper trading. Well, there's your start right there. Okay. Started with 2,000, balance is now over 36.5. Oh, with NQ. Wow. You sized all the way up to 36.5 on NQ. That is impressive. Yeah, it probably has really big drawdowns. He doesn't say enough about it to really tell us anything. Okay, somebody points that out. Okay, win rate 69.75. I don't like this at all. Okay, interesting. So his win rate is roughly 70%. His average winner is larger than his average loser, so that's unrealistic. When I say unrealistic, like, the chances of you keeping those stats over the long haul are extremely low. Win rate of that and your winner is 1.5 times your loser? No way. That'd be super hard to keep up. It's not 1.5, it's more like 1.25. But max win is 1,000 and max loss is 300. Those are really good stats, but it's only 1.5 months. Mm-hmm. Let's see, here's his equity curve. He's probably he's probably doing like a scalping strategy that's over. And he's just been, well, no, over the last month and a half though. Doing that in NQ. Well, but NQ has been up. So he may be catching on to the, the NQ long sort of a thing, right? Yeah, definitely thing that will trip you up is fills. That's definitely true. The move over to live is probably going to affect this strategy a lot. Even if you did it on sim in NQ, that's pretty impressive, man. Okay, hearing a little clicky over in the S&P 500. I'm hearing more commentary about estimates for the Bank of England interest rate hikes. It's kind of interesting that all of the market analysts all seem to be moving towards that 5.25. Okay, here's one for you. Reddit is filled with communists. Reddit is filled by far left people who have no idea about economics or how the economy works. They live in their delusional world where everyone is equal in terms of net worth, which is impossible to achieve considering multiple factors such as intelligence, amount of work done, risk factor, and investment. Just ask them, how do you plan to run an economy? They will fail to answer the question and instead divert to something else. will use a cell phone created by a capitalist company, use an app created by a capitalist company, use the internet created by a capitalist company, stay in a house located in a capitalist country, because communist countries promote equality by not allowing anyone to access the internet. Yep. Bailey is speaking right now. Ideologies have seasonal trends right now. All the cool kids are socialists. I don't know about that one. So here's my take. I think that communism has a fundamental advantage on the internet. When people are dissatisfied, they will be louder. They will gain more eyes. You know, like it's more engaging content. The dissatisfaction, as opposed to people who are capitalists. Who are, you know, understand what's going on and are having success in their lives. They just do, right? They just do. They're not spending all their time on social media yapping about it. The ones that do come on and yap about it are probably trying to sell you something, you know? So it's rare that you'll see somebody, you know, online extolling the virtues of capitalism, because it doesn't work very well on the internet, right? The best way to extol the virtues of capitalism is to be successful and help people around you be successful, rather than yammering about it. I'm gonna write that. The Bank of England governor speaking could have an effect here, but I'm gonna say this is still pretty tight. And in fact, the level 2 activity that we're seeing, I guess it's not terrible, but I think it's slowed down. We never really saw like activity pick up during a time period where we thought it would. So I think that I am in the mode of now, like, so again, when you have a no news Wednesday, usually there is news on Wednesdays, right? And Wednesdays are often one of the bigger kind of mover days, because a lot of people, you know, allocate capital on that day. They make their plans on Monday and Tuesday, and then they execute it on Wednesday. Well, if we're not seeing any of that up and, you know, until now, then that probably means that we're in that really, really tight range Wednesday. So at this point, we are in a tight range. but we still need to be a little bit on our toes for a debt headline, right? So we might get the opportunity to come in here and sell treasuries, maybe. I don't know. They're already kind of a little too high for my taste, but I'm just scrolling around here, seeing anything interesting going on. I did not expect to bleed follow through from yesterday overnight. Are you talking about just kind of like the move slightly higher in the treasuries in the overnight session? You know, the trade yesterday on ES and NQ futures. The trade yesterday, I think, was really interesting because, excuse me, it looks like a flight to safety move yesterday to me, right? And probably driven by the debt ceiling talks. But there wasn't like one headline or thing that happened that kind of drove the markets to that. It seemed like it started to happen while negotiations were still going on, you know? So maybe insiders got some information from inside of the meeting that suggested that docs were going badly. I don't know, man. It's an area where for us, if we're trying to be informed traders, it makes it very difficult for us to be informed traders. There could be a situation that pops up where that shifts really quickly on us, right? Where a piece of information comes out that's so important that, you know, we're going to be able to catch a piece of it, and all of the big institutions are going to be flat-footed and everything, right? But at the moment, we don't really have the edge. And I think that a lot of people in the market feel that way. So you just kind of get this market that just does nothing. So it's tough, but you know, that happens. You're going to have periods where you take lots of trades, and you're going to have periods where you don't take a lot of trades. And a lot of people have a hard time dealing with that because they've always come in with the expectation that I should be able to like make money every week, every month to pay my bills and everything. And that typically doesn't go that way in trading, unfortunately. That's how I feel. No edge at all. Don't worry, this too shall pass. The thing is that once we get past the debt ceiling issue, then we get all sorts of really interesting questions on the macroeconomic front, and that I think kind of suggests that we could start to see a downtrend that we could probably take a big time advantage of. So that's why people like the idea of day trading. You make money every single day. Maybe. I don't know. I think that a lot of it is conditioning, to be honest with you. I think that we were all told things about the market as kids in the 80s and 90s that aren't really true anymore. You know what I mean? Yeah, if a default happens, then it will slam. Well, yeah, I mean, I tell you what, if we actually get to this thing where like they can't get a deal, the market will probably become very confusing, because what you're likely to see is at first the treasuries buy, as a flight to safety, which is going to be like, well, that doesn't make any sense. And then in the longer run, probably you see the treasuries sell as there's like defaults and stuff. But there's probably going to be weird things because what will happen is the market will start to price in that like the missed debt payments will eventually be paid later and perhaps with additional interest. So like, yeah, it's going to be weird if it happens. That's why you have to go for the jugular when the opportunity arises. There's definitely something to that when you know you have the advantage of you want to push it, but you be careful pushing it too hard because that can just lead you into taking bad trades, right? I find that when I'm trying to push it, that it leads me into bad trades. That when I need to push it, the market kind of basically has to pull me into it. You know. This guy is talking about the talk-friendly swimwear that Target has put out. And he says, I thought Tuck Friendly meant they supported Tucker Carlson. It's like fishing. But the thing is like in the 80s, we were all shown these guys that are involved in the markets, they make millions of dollars, right? And in the 90s, we were shown these guys that they were scalping and they were making money hand over fist, especially like the early 2000s, right? And the problem is like the market evolved. The market is very statistically efficient. So like the advantage that you can gain as a retail trader, it's super hard. You can't use the things that they were doing 10 years ago. The edge in those things have been like pulled out, and so much. So, and that has happened to such a degree that a lot of day trading doesn't make sense. You know, that's not to say that you can't day trade and that you can't be successful with it, but rather kind of the traditional strategies don't make sense anymore, right? And people don't seem to understand this. Okay, so I'm just seeing something going on with the level 2 here. Oh, that's because the S&P 500 opened. Okay. Anyways, people don't seem to understand a competitive market, you know? Like people understand when you're playing basketball, right? If you pump fake, people are going to jump and then you can move and right? You're taking advantage of people's like natural inclination. But like if you're playing against a skilled player, they're going to know that and it's not going to work, right? So people understand these kinds of competitive dynamics when they're playing a game, but for some reason they don't realize that these all apply doubly so in the financial market, right? They pulled up. Well, so my understanding or what I had read was that Target did panic and they didn't pull the products, but they moved where they were and like tried to downplay it and stuff. I kind of wonder how this is all going to go, because the DEI initiatives is a subject that is definitely played into markets, right? Because they created these indexes to show how inclusive a company is, a metric that is frankly like total bullshit, right? Because you can come in and screw Americans over every day in your business, but then because you talked about LGBT once or had it in a commercial, you're an ethical investment. It's total bullshit. Okay, but the fact of the matter is that there's like this score that companies get, and there are investment companies out there investing based on this score, right? So that's a real financial incentive that's kind of pushing things. And now you're kind of seeing that, okay, but you do things a certain way that it really hurts your business, like Bud Light. And then it's not worth all of the investment that you got from it, right? But I also kind of wonder, at what point does either that index go away? Like, people realize that investing in DEI stuff means you get worse returns, or somebody creates a competing index. And I don't know what we would call the index or what, but you know, we could create something that's still based on like ethical investing, but we don't base it on woke ideals, right? And it create a competing financial incentive, right? It seems like we're in the middle of something that's still developing, and no way to know where it goes. Yeah, this is a big iceberg at 41.35 in ES. 14K trading there. Big iceberg in ES. It's kind of absorption against a move. How come on my dumb I don't see that 41? Oh, maybe 41.33.50 did touch. Okay, I'm just misreading it. The Jim Iorio, he must be watching the podcast or the stream today, because he's tweeting about similar things. We need to stop pretending that socialism isn't an immoral system driven by petty jealousy. Please just stop. Do we have what? So let's see here. When is Yellen speaking? Probably not, just because I looked through what the news events are during my trading period, and so if I didn't know about it, that means that it's another day. Oh yes, so here I see it at 1 o'clock. Treasury Secretary. Yeah, no, I'm not. I'm not sticking around here for 6 hours just to watch Yellen. Wait, what is she speaking on though? Maybe if I come over to Forex Factory, I can. No, yeah, I think it is. Oh, okay. Oh no, I see her at 10. No, I see her at the top of the hour. That one's not on my phone. Maybe if I refresh my financial juice. Hold on a second. Nah, I don't. It's just not on my financial juice calendar. Let's see what it is. Detail. Due to participate in a fireside chat titled "The U.S. Economy" at the Wall Street Journal CEO Council Summit. Okay, so I don't think that I'm going to like pull that up and listen to it, but we will get the headlines as they come through the news clock, because I that seems like an event where she could totally say something. Yeah. We usually stick around until about 11 o'clock Eastern time, so. FOMC minutes, though, that's much later today. That's going to be interesting. Because last time around, I wasn't so sure if what we got in the press conference was really, truly representative of what was going on in the meeting, you know? There's someone who is thirsty and is about to drink from the dollar milkshake. Well... He's saying they're buying the dollar here. So we should pull the dollar out. Sometimes I get zoomed in way too deep on the dollar, and you really kind of have to be out to really see what's going on there. Yeah, I've never heard this slang. Is this new? Is there a new Gen Z slang milkshake? What is this? Oh, help me out here. My primary demographic is in their 30s, okay? Wait, maybe I can go to Urban Dictionary. What the hell? Okay. So I go to Urban Dictionary, and the word of the day is blood boy, a young man who is a healthy specimen with no drinking, smoking, drugs, possibly vegan. No, what? You don't want a vegan, no. And is hired by a tech billionaire to be a source of youthful, healthy blood for him via regular transfusions. Okay. Let's see here. Milkshake, a whipped iced dairy drink, usually chocolate, vanilla, or strawberry. And milkshake slang for a woman's body and the way she carries it. Blowjob. Okay. Oh, wait. Okay, hold on. This is actually giving me something. You may have heard of the dollar milkshake theory from Brent Johnson on Twitter. While it sounds like a tasty treat, things could get ugly if it unfolds as Brent expects. Oh boy. Many investors, such as Ray Dalio. Okay, so I'm instantly like not into this. Feel the U.S. is a waning world power and the dollar's days as the world's reserve currency are numbered. They would argue that the U.S. has flooded the world with dollars by cranking up the printing press, and that ultimately the dollar's value will decline relatively and will no longer be the currency that greases the wheels for global trade. Perhaps in the worst case scenario, the dollar hyperinflates and people will be rolling barrels full of greenbacks to the grocery store for their milk and bread. Despite Ray Dalio's opinion on the dollar, others are not sure this will play out. One of them is Brett Johnson, who introduced the milkshake theory and pushes back on the thought that the U.S. has reached its zenith as a world superpower. Okay, now I'm interested. You may have seen the U.S. dollar reach a 20-year high in 2022, according to the dollar index, so the dollar's current strength is not in question. Brett Johnson argues that at some point that is going to matter. Central banks have done a remarkable job of kicking the can down the road via quantitative easing, bailouts, PPP loans, and stimulus checks, but eventually you have to pay the piper. Nearly every central bank has followed the same playbook and flooded its economies with liquidity, meaning the currency debasement that's impacted the dollar is nothing unique. To that point, inflation has been a global phenomenon this past year or so, not just an American one. The dollar milkshake theory says that global central banks created a big milkshake of liquidity with their unprecedented monetary easing, which injected roughly 30 trillion of reserves into the economy since 2008. When the Fed's policy transitioned from easing to tightening with interest rates increasing, they're changing to a metaphoric syringe for a big straw sucking up liquidity from global markets. As liquidity gets sucked up, the dollar strengthens against other currencies, putting immense pressure on countries with dollar-denominated debts. This creates a dangerous feedback loop as more capital flocks into U.S. assets supporting demand for the dollar. Debts denominated in dollars globally become more expensive as countries' local currency loses value against the dollar. As America sucks up financial flows globally, companies and governments outside the U.S. see their credit risks increase due to their diminishing ability to pay down foreign debts denominated in dollars, amplifying investors' fears and compelling more capital to flee. Well, that doesn't sound like any kind of... Okay, hold on. Okay, Republican negotiator Graves says no progress on talks. Market's not reacting as strongly to that one as it did yesterday. They are buying a little bit in the treasury. Okay, anyways, that doesn't sound like any kind of theory or anything. That just sounds like that's just how the market works. Yeah, you put money into the market and it kind of causes markets to flood up, and then you take the money out and it kind of causes them to go down. And yeah, when we're going into raising rates, that brings a lot of money home and causes the dollar to move back up. Kind of paradoxically, contrary to what people think that the dollar would do. And hence, you get this situation where in 2021, at the beginning of the year, everybody was short the dollar, and the dollar rocked their worlds. Right? I don't think I've ever seen a trade like go so badly for the industry. Everybody was short the dollar. And they got destroyed as soon as the whole Russia thing happened. Well, so we're kind of getting what we were, we're kind of coming to the point of decision where we're getting more headlines about the state of debt ceiling negotiations. We just got a headline that the day before had a bit of an impact, and today is kind of being ignored. So it is not enough for the market to care, I guess, because it is still a slow day. Confidently shorting, well, from what price? I don't know. Anything. I'm still of the mind that like anything below the center of the profile is difficult for me to feel confident in. You might have been able to have gotten like 08 and ZV. There was a point where you could have gotten 08. We'll read this last paragraph because it's interesting, because it is useful information. The dollar strengthens in this scenario because the U.S. offers a financial safe haven with its liquid markets, established financial system, strong rule of law, etc., where large institutions and investors can feel comfortable storing their money, as well as higher interest rates on its government debts. According to the New York Fed, approximately half of all cross-border loans, international debt securities, and trade invoices are denominated in U.S. dollars, and 60% of global foreign exchange reserves are in dollars. They conclude that rising U.S. public debt levels and inflation could become more concerning to foreign investors. However, no currency manipulates the characteristics of the U.S. dollar as a store of value, unit of account, and medium of exchange. Moreover, U.S. assets are viewed to be safe and liquid and have withstood the effects of global shocks. Interest rates. The reason higher interest rates on U.S. government debts comparatively support the dollar has to do with what is known as the carry trade. For example, some central banks, including Japan and the ECB, still have comparatively easy monetary policies and have kept rates close to zero. Investors seeking higher yields dumped Japanese and European bonds with barely positive yields for higher yielding U.S. treasuries that have, in their eyes, government bonds from all these countries all carry roughly the same level of risk, yet they can earn more interest by parking their money in the U.S. As a bonus, it's not unreasonable to think that the U.S. government debt is even safer than that of Japan and Europe, since the U.S. could theoretically just print dollars to pay down its debt obligations in an emergency. For Japan and Europe, like most countries globally, a large swath of their debt is denominated in dollars, which they cannot print in a crisis. In other words, U.S. Treasury bonds offer better returns with less risk, which is why the carry trade is tempting. The yield differential on a risk-free government bond is corrected in part by currency repricing. In this instance, it results in the U.S. dollar outperforming other currencies. In a carry trade, the investor might borrow a currency with a lower interest cost and then invest those borrowed funds in a country where they can earn a higher yield above their borrowing and currency hedging costs. This was the story of 2022 as traders and investors exploited the higher interest rates in the U.S. compared to much of the rest of the world. If the spread in sovereign bond yields is large enough, it incentivizes investors to execute this trade in mass, which ends up boosting demand for U.S. dollars until the spread narrows to a more appropriate level. To do that, you would sell your borrowed yen or euro and buy dollars, putting further downward pressure on the yen and euro while demand for USD pushes up its exchange price level. So how the dollar milkshake theory happens. Despite efforts by Russia and China, the bulk of global trade is still settled in USD. Additionally, the entire investment world depends upon the dollar and its money flows, as global loans made in USD need to be paid back with interest in dollars. The dollar milkshake theory explains a dollar rally in terms of basic market dynamics of demand for dollars exceeding their supply. The world is currently awash in dollar-denominated corporate and sovereign debt, and repercussions of this massive leverage may eventually be a burden too heavy to bear. It may kick off a sovereign debt crisis if the loans can't be repaid. Yeah. In the meantime, however, it creates a massive demand for dollars for both trade and debt repayment. As mentioned, this will lead to the dollar strengthening and siphoning off all of the liquidity of currency markets worldwide. In a sovereign debt crisis, Brent Johnson expects the dollar's value to rise dramatically against all other assets and suck up the liquidity of foreign currencies as the dollar rises. Now, so this theory wouldn't happen, because in a situation like that, the United States will just print more dollars and give it to the countries that are having a problem. So it won't work the way that this guy is saying. As the dollar rises, global capital will flow into the United States. American markets would have plenty of liquidity then, but markets globally could see a severe credit contraction. This also happens because the U.S. financial system has an unparalleled and unrivaled recent history of deep liquidity and stability. No other country has sufficiently robust capital markets to anchor the global economy. In a panic, investors flee less stabilized financial systems, weaker currencies, unstable government regimes, and more volatile currencies for the safety that the dollar represents. I am smarter than him. I think so. If that's what his theory is, then I am smarter than him, to be frank with you. Look, so I really hate the appeal to authority argument, right? I'm just stating I guess I can't say that this is a fact, but I'm just telling you. The Federal Reserve works with other countries, right? Like when the Credit Suisse thing was going on, Federal Reserve was talking over to the Swiss the whole time, right? So if other countries need dollars, the Federal Reserve has this whole system and this facility set up to give them dollars when they need it. Like just straight up, they can just get dollars when they need it. So this idea that they're going to come into this spot where there will be a sovereign debt crisis, no. I mean, it could get to a crisis point, but at that point, the Federal Reserve would step in and resolve it. And so there's no way that it could actually play out the way that Brent Johnson expects, because again, the Federal Reserve would stop it, right? In other words, when you get to the point at which everybody says, oh, maybe Brent Johnson is correct, and they start trying to take his trade, is exactly when it's going to flip around, because that's the point that the Federal Reserve would get involved, right? It's not about who's smarter. It's about what information, what is the better information, right? Let's see here. So he says vulnerable countries in a crisis must either print more of their own currency to obtain dollars, which can make things worse if they print too much, or dramatically cut spending, which could, or the Federal Reserve could just give them dollars. Otherwise, they risk default unless they can secure a bailout from another country or entity like the International Monetary Fund or the Federal Reserve, who has already said that they're willing to do that. You know, in a global crisis like the one envisioned by dollar milkshake theory, bailouts would be unlikely given the scale of the issue. I don't like it. Okay. I don't care. He invests for the largest Saudi Arabian families, and I bet that there's probably a lot more people that can make that claim than you would think. They got money everywhere, but it doesn't. You're making an appeal to authority argument, right? So in order to be, that's, I always love this discussion, because then I can turn around and I can say, look, here's the argument that I'm looking for. The argument that I would be looking for would be, here's why the Federal Reserve would be unlikely to do that. Or here's what would happen if the Federal Reserve did do that, that would just make things worse, or et cetera, et cetera, et cetera, right? So what we're doing is we're pointing out a fact about the financial system and how it would likely affect the dynamics in a situation like that, right? And my claim is that in any kind of sovereign debt crisis of the one described below, where there's a shortage of US dollars abroad because it's all coming to the United States, the Federal Reserve would just use their dollar swap lines to give these countries the dollars that they need. And we know that the Federal Reserve has these facilities, and in fact, we know that they've used these facilities to help them. Like with Japan, right? This whole thing with the peg in Japan, and remember, when was that? Was that in February when we had some volatility in the markets because of things going on in Japan, and the Federal Reserve helped them, right? So you've already kind of seen a situation kind of going the direction that this guy is theorizing about, and you see how the Federal Reserve reacts to it, and it blew over, right? They ended up, you all already forgot about it, right? I really at a lot higher level, I just despise anybody that comes online and is trying to take ownership of a theory. You know, like the Ray Dalio and his whole thing about, oh, the US is in decline and everything, and they're trying to establish themselves as the expert. Like the whole thing with the internet is that the internet is supposed to some extent eliminate the need for experts, because everybody can have access to the information, you know, and the experts can all share all of their information, and it all gets conglomerated together. So anytime that a person comes on and says, I'm so smart and I know so much about this issue, and that's why you should listen to me about this thing instead of everybody else, I immediately turn off. Immediately turn off. These people are usually full of shit. And they're usually just, you know, and it always turns into self-promotion, trying to get money from you, honestly. So when people try and use the appeal to authority argument, I hate it. I hate it. Because it's a logical fallacy, and it doesn't, it's not an effective argument. And the same goes for when we're trying to use the appeal to authority argument in favor of like a government agency. Dalio front runs and then writes a book, and the rest of folks invest. Like the thing that I think is funny about Ray Dalio is that his whole career has been kind of based on this sort of doom and gloom scenario. And like every time that something happens that is like in favor of his doom and gloom scenario, and he's like, here it is, I'm finally going to become, you know, like the greatest investor ever. And then like he loses a ton of money, because that's exactly when it reverses. Like back in the 80s, he was warning about Mexico defaulting and everything. And then guess what? They did default and he lost money. And so now he makes a book that's like along the same lines. Yeah, I really think at the end of the day it comes down to he's selling a product. He makes money from the book. Well, I don't know. For him, I mean, he already has money, so he doesn't need to make money from the book. I'm sure that he genuinely believes it, but there seems to be like too much of a focus on him. You know what I mean? Like there are contexts in which experts are useful and valuable, but I continue to see people try and use the experts to prove an assertion rather than to try and draw upon their experience. And right, so when I say draw upon experience, it's like you have like pieces of information, but how do you use those pieces of information to build a model in your mind for how to do things? That was an aggressive reach of the lows there. Unclear if we're seeing a news headline or anything. I'm not sure what a news headline would be right now that would push us down. Haven't heard anything from the Yellen thing, but that's starting, isn't it? Yeah. Maybe we just got good news on the debt ceiling. Maybe insiders just got good news on the debt ceiling. It's possible. We did see the dollar move up there with that, so that's kind of interesting. Dollar up, treasuries down. Dollars up, treasuries down, and equities not really moving. Well, no, I take that back. Equities have been on the downside earlier, though. I'm going to say overall, though, the move looks to be much more concentrated in the treasuries. was like a 1 or 2 basis point move too. Well, that was enough of a flow that if there is a big meta order coming in, that you could see some continuation off of that. And I don't really see significant liquidity coming in to really push back against them until 14. But I'm still unsure if it's really actually a meta order. So there's definitely the possibility of it bouncing back up into the range here. Until I know what's driving this. See, it's just kind of going back and forth across 6.5. Strong bid on that uptick. So far, I'm not seeing a whole lot of reinforcement for a move lower, but we're in a situation where that's going to like shift very quickly, whether it goes up or down. So, because you're going to be driven by the new orders, right? If there's more market orders out there, then it's just going to move. Uptick. Okay. Nothing going off at 17.5, but right. S&P 500 is still moving down. You know what, for fun, because we got to do something fun during the stream today. I'm gonna fade this. That was a mistake. That click there. Didn't mean to click there. It's probably okay, but I wanted to try and maybe take another contract as she goes, and it's not right. Now they're making a little progress at 16, so But I'm just seeing the S&P 500 move down here, and it seems contradictory. So something really weird is going on with the. I wouldn't say that they're correlated with each other at the moment. They could be like separate moves, but why would the treasuries move up and the equities move down? That's weird, right? Yeah. And look, I am seeing buying coming into the treasury market. I haven't heard anything from the Ellen thing yet. Okay. I'll leave just one contract on and see if we can let it to run now, because we got a pretty good area to put a stop, right? We can just put like a volume stop right here. Stop limit. Probably relax. Sometimes, well, usually they do kind of move together. Usually I'll if I'm seeing the treasuries move in one direction, I'll see some sort of a reaction from the equities or vice versa. This one, it's like, oh, I saw a move in the ZN and that kind of died down, and then I saw a move in ES to the downside. And the way that it moved in the treasuries really suggests to me a news headline, and I'm sitting here thinking, okay, well, what would the news headline be? A debt ceiling thing? And everything that I'm expecting on the debt ceiling is like bad news, right? Okay, so if it was bad news, we would probably see treasuries buy and the equity sell, right? But that's not what we saw. We saw the treasury sell and the equity sell. So then what if it was good news on the debt ceiling? Well, that also wouldn't make sense, because wouldn't the equities buy in that situation? I don't know. So then maybe it could be something more like inflation. Like inflation's still a big problem. So we sell the treasuries and we sell the equities. That would maybe make more sense. But then, like, what would be something that we would be getting at that time that would be suggesting that? It doesn't make sense. So they have to be like disconnected, but then if they're disconnected and then they're just like meta orders that are being executed because it's Wednesday or whatever, why the timing of it and why so impulsive there in the treasuries, and it doesn't really make sense. Oh boy, Republican presidential candidate Nikki Haley will participate in a live CNN presidential town hall on June 4th in Iowa. Iceberg at 18. Okay, well, I tell you what, that downtick, sure not encouraging for some reason. Like, it looked so much better when it was 17 half bid. No. It's we get the Federal Reserve minutes, so it's not FOMC day today, but we get the minutes from last time. I think the FOMC is like next week or the week after that, though. It'll be the week after that. Yeah. It'll be June. Oh, maybe I'm wrong. Oh, it'll be June 14th. It's 3 weeks. Okay, so the flow in the 10 years seems to have balanced back out. Flow in the 30 years is actually long. Okay, that feels a little bit better. Okay, let me read you another one that I've come across here on Reddit. Is VWAP really that reliable? This sub heavily frowns upon most indicators, but the one indicator I've come across is even pure price action traders say is useful is the VWAP. Price action traders say is useful is the VWAP. Can anyone with experience with it care to share? Any input would be appreciated. Thanks. Anyways. Assign Carbon replies, VWAP falls into the category of technical analysis with a touch of statistics. Is that not like... Isn't technical analysis supposed to be premised on statistics? Well, whatever. Okay, now I am starting to get yelling headlines, by the way. I'm gonna try playing the cue here. I swear I was expecting to come in and see one of your legendary swing trades in place. What made you not go long UST after we've seen yesterday? Oh, no. Because I just don't want to be involved with my live account if it's going to be like that crazy, you know? I mean, I guess maybe a swing, but no. You can see here I'm kind of messing with the reversal trade on Sim, but nah. Oh well, these ones over here in the main treasuries, those aren't live. But I am actually more likely to try and swing it over here in the micros, right? Like if I really think that like we're headed, you know, like now is actually maybe a good example. Like I think the chances are rates are probably headed back towards 4%. Like once the debt ceiling debacle, whatever is out of the way, I think we probably go back towards 4%. So I'm kind of sitting here waiting for the right opportune time where, you know, we get a headline that the debt ceiling limit is all taken care of and I can go long interest rates and just hold it, right? And then when I do that, I will do that in the micros. I might not hold it as long as I want to. I'm still kind of risk adverse about it, but I will swing and hold them overnight and stuff. Have I tested the new Ninja Trader? Well, so you're talking about 8.1, or you got to be specific because there's this whole deal with different versions now, right? So I'm still on Ninja Trader 8.0. I tried Ninja 8.1 and it did not work with my setup, with my data setup. It doesn't work with my data setup, so I did not switch to 8.1. No, that's not they want you to switch to without exception. So the platform has been notifying everybody that there's an update that you have to do in order to use CQG Continuum. So it's been pestering everybody about that. But they made both an update to the 8.1 branch and the 8.0 branch. So I could download a version that would still work for me, that would give me that one fix. But it doesn't matter to me because I don't have CQG. Yeah, I'm getting the prompts that I have to upgrade by June 24th, right? And if you're using Ninja Trader Brokerage and CQG Continuum, then you definitely have to upgrade. But you don't have to upgrade to 8.1 necessarily. There is a new version of 8.0. It's like 8.0.17.1 or something like that. So they're not forcing you over. One does have to wonder though if a point comes where they do force you over. That's just how companies tend to do it, is eventually they screw you over, but we'll see. But so far they've been very accommodating, I'm finding, so. Okay, it looks like they worked something out there, and they're moving back up here. This is kind of interesting. It seems like we had that down move, then it really made me think that maybe there's some headlines and stuff coming in, and we didn't get anything. And now I'm starting to see kind of market maker games, aren't we? Like Oh, look, they're going for a new low. This actually, maybe there is a second leg and there's something really, yeah. Oh, just kidding. Right? It's playing that game. Hmm. You see that it was like kind of impulsive to the other side now too. Okay, there's a new higher high. I think in the given situation it's probably meaningless, right? I think the market maker is in charge here now. I haven't really seen a meaningful recovery in ES yet, but I bet you that the 0 date expiration guys are going to be playing it here soon. Let's see what happens. So far, this sim trade here is working out really well. But you can see the problem where because I I did think about, I could take it on my live account. I don't know if I have enough support to really justify a trade over here. I just kind of got the feeling, based on the action. But like if I did it, wouldn't be making very much, right? We got like 30 minutes left. Why are people into the 0 day to expiration trades? What's the allure? You know what? I'm not. I don't completely understand it. It doesn't look like a sound strategy to me. I mean, the thing is as I understand it, it's not necessarily the retail traders. Oh. I do vaguely recall Zero Hedge writing an article explaining why it was becoming popular, but I just don't remember what the deal was. Let's look it up. Generally, a contract near its expiration date whose strike price is near the money will be sensitive to relatively small changes in the market. That makes them attractive to traders looking to bet on intraday moves. Here we get the oil stocks or inventories. So we got a draw. Looks like oil's moving up here. Yeah, I don't know. I think that it's just like they started offering 0 day to expiration contracts and they're good for intraday trading. I don't know if there's really more to it beyond that. But to me, it doesn't make a lot of sense. Like most 0 day to expiration trades, buyers are gonna expire worthless. Like I saw one week where 80% of those options expired worthless, right? You're like literally just giving the market maker money. Doesn't seem like an attractive space to me, unless I was gonna sell. What the hell? You know it's a slow day when I'm browsing Reddit, right? Okay, question for Jamie Dimon. I have the opportunity of asking Jamie Dimon a question at his welcome speech for interns and fellows. I have no idea what to ask. Any help would be well appreciated. P.S. I'll probably ask the most upvoted response. Okay, the most upvoted response. Ask him if he is planning on attending the potluck in Chicago. Oh my gosh. If he actually asks Jamie Dimon that's gonna be freaking epic, man. That would be epic. Yeah, see, it is playing with us, man. The market maker is letting it like fall like really impulsively, and then it's like, oh, just kidding. And look at the volume through it. See, sometimes this is where it's like, if you watch price, I feel like the market maker can fool you really easily. But if you're watching the volume, you kind of will see like, maybe the situation is a little different. Like this right here, from here to here, it was about almost 4,000 contracts, right? And then like, look, it immediately came back out. So we thought here maybe there's a meta order, but like we almost immediately saw like probably not. So now you start getting this stuff: new low, lower low, higher high, impulsive move back down. But look at the volume on it, man. Look at that mess. Look at the, like, have you ever seen a more disorganized cumulative delta? That's like, it's just silly, right? So all of the price action traders are coming out here looking like, oh, there's something that's going to happen. Oh, it's going to be liquidity. I think the way that what they would be looking for is so if we say this is the structure right here, and this is a liquidity grab, that we're going to come back. They're probably going long here. But I bet you what's going to happen. I bet you what's going to happen is it's going to bounce up. It might even make a new high and then just come back and get stuck at 113.17 again. My guess. Doesn't look like anything is actually happening in the market. It looks like the market maker is getting bored and playing games. I learned today we can get better at understanding of correlations using AI. Well, so, kind of, yeah. Well, because what you can do is you can take all of your instruments and put it into a machine learning neural network. And that neural network will kind of sort out the current correlations as things go along. Right? They use that sort of stuff really heavily in the treasuries markets too. You know, these guys that are trading all of these how would I describe it, you know, like over the counter kinds of bonds and stuff like that, right? How do they determine what prices to use and stuff? They use models like that really heavily. So for a retail trader, I think it'd be fun to build a system like that, but I think that the amount of edge that we would be able to derive from something like that probably wouldn't make up for the amount of effort that you would have to put in to make a system like that, because, you know, like, you're gonna need really good data pipelines and everything to do that. Oh, you know what? I totally forgot. Thank you, alligator, that, you know, we're getting close to rollover. Like, we got 3 days. how'd you go about training your own neural network for trading purposes? Well, so what you have to do is you have to create a data pipeline that gets the past data for all of those different instruments, and then put it into a format that Python can understand and convert things into features. So like you may want to have one feature be a correlation matrix where the correlation from each instrument to each other instrument is tracked and input into the model, and those are features in your model, right? And then you pass that into an algorithm. Like I don't know what you would use in this case, but you know, it's something like GPT-4 sort of a thing, right? And then you basically train it on that data to make good profitable trades. But the key being that the key thing that you've got to do is you've got to get like the data in a format that the model can use. And you might not have the quality. You may find that the data is not as quality as you think. Well, you could. So first of all, well, having a training a model live is a slightly different thing, and not all models can do that. For instance, they're still working on doing that for GPT-4. But why wouldn't you just do the past data? So the issue that you get when you're training a model live is that you get less data, and like, how do you know if you're really going down the right path, right? Because you know what you pass into it really matters, right? Like what features are you passing into it, right? Do I do a correlation matrix? Do I do a co-integration matrix? Are there certain calculations that I should be making first and then passing that into the model? And how do you sort out if that's correct or not? And if you're doing it on a forward testing basis, and the amount of data that you need to forward test for that to work out is kind of like, right? And if you're in a situation where everything that you're passing into your model is primarily price data, you might as well use the historical data. And then what you can even do is you can teach it things, right? You can by selecting different data sets, you can train the model to catch certain types of things, right? So you can come in and you can say, here's a type of market that was really interesting, and here's a type of market that was really interesting. And since I can choose the data sets, I can ensure that those things get factored into the model. Yeah, well, if you're wanting to do it on volume, then like freaking good luck. Because like, again, I think that you would need at least a year's worth of data, right? So you could go and you could purchase the data for well, I think most brokers will give you a year. So I guess you could probably pull a year. But if you wanted to pull more than that, it's like $1,000 per instrument. So but even if you have the data, it's a big project. Like I haven't really put a whole lot of time into developing this stuff yet, but I think that when I really start getting into it, that it's probably going to take me 2 or 3 years to really get something that would like be usable. You know, this is something that a small team to build a really good solid platform, it would probably take at least a year. And the kind of work that you're doing is it's not what you're gonna expect, right? Because the whole thing comes down to filtering your data correctly. the model is kind of only this one tiny little part that comes in at the end. You realize most data science projects fail because they are unable to get their data enough quality data to the place where they can actually run useful statistical analysis on it. Most companies never get to that point. They're going from, you know, okay, well, I have this stuff in the database, and how do I get it to where I can feed it into my model? And they can't get from A to B because their data is just not, their data quality is not good enough. Yeah. So that's really primarily what you're doing. You know, and for us, we have this added difficulty of like, you're gonna have to attach it to NinjaTrader or connect to Rhythmic directly. So that's another issue that you have to deal with and factor in. So do you see what I'm saying here with the market maker effing with you? Right? All of the price action traders probably went long there. And depending on what their stop is, they may be stopping out. There might be some that will have their stop as low as 15.5. So will they trade through 15.5? It looks to me like I wasn't paying enough attention and that I probably should have taken profits. Let's see here. How many contracts did I use? 4. So if I can get filled here, then it's acceptable. Not the best, but acceptable. That's where data scientists come in play, I guess. Yeah. Well, like, that's the whole thing, is that like everybody gets into the industry because they wanted to do like the data science part of it, and then they end up becoming data engineers instead. Okay, so at 11:45 Eastern Time, McCarthy is going to have a press conference, so that is, you know what, McCarthy, I don't like, oh, no, wait, no, you're probably okay. You're probably okay. That's like a good 3 hours before the FOMC meeting minutes. That's gonna throw a real wrench in the rest of the trading session, though, I think. So now we're kind of in limbo until that happens, right? Well, it's okay. I took the profits on it. I mean, it could have gotten a little bit better, but 18.5 wasn't bad. I don't know. I'm still reading my machine learning books and stuff. I haven't been doing a lot of reading and studying lately. I might be getting into a point where I might be able to do that. I'm feeling better. Hopefully today I work out and it doesn't make me more sick again, because that's kind of what happened last time. You worked out on Monday and now you're sick? Yeah, that's really this kind of nasty thing where like sometimes if you're sick, you work out, it weakens your immune system and you get sicker. Had pressure drop. I don't know what you would call that. Okay. So the robots kind of reacted a little bit like I saw the whole book shift there on that downtick. By the way, when we're watching the volume, we've shifted from a real mess to net selling. I think it would be more fun if we sold through the bottom of this, just because that would screw up the price action traders, right? I think training it on a recon tape would be better than training it on a DOM. I don't know. The thing is that again, features what you pass into the model like matters a lot. So if I was passing the depth of market into a model like that, I wouldn't just be saying here's the number of orders that there were at each price out or whatever, each position out. I would probably be having to track a couple of different things. Like one feature I would put in would be the imbalance between buys and sells within the first few prices, right? Or the theoretical midpoint between the best bid best offer if I was doing a stock, right? Those sorts of things you pass it in, right? So what kind of features would we make with the recon tape, right? Because at that point you're basically giving it delta, cumulative delta. That's all you got, right? Delta, cumulative delta, maybe something about how big of an order it is. I don't know. Yeah, take into account papers like Starcraft where he says best bid, best offer imbalance matters when the spread is one tick. Yes. I don't know. A lot of the papers like that, I kind of feel like are like no duh. Yeah, if the bid goes low and the offer is really strong, you're likely to tick down. No duh. It seems so obvious. You're sitting here and watching it every day, but you have to have a huge study to be able to prove it, right? And the question is just like at that point, how much edge are you actually deriving from that? Certainly don't think that I probably could be useful, but you're probably not gonna make very much if that's like the entire premise of your strategy, right? Oh, you said the imbalance is not relevant. Well, yeah, if the spread is really big, that probably is true. But that's because when you have a large spread like that, then what becomes relevant is like the theoretical mid price and where the orders that are being executed in between there are coming out at. Right? They say they estimate the theoretical mid price between the best bid best offer, and then if a market order comes in, did it execute above or below that mid price? There's a lot of studies on that. But that's where I feel like that, like, I don't know, I don't think these researchers are sitting and watching a DOM every day, you know? And maybe if they did, they would maybe have different ideas, because I think that what's more interesting is what is the imbalance between bids and offers cumulatively over a wide range of prices, and is there a hidden Markov model related to that? And just more about McCarthy. He's going to have a press conference. So that press conference will happen in like, what, 45 minutes? In the meantime... Jake, welcome back. You got to come in earlier, man. We only got like 5 minutes left. Would you say that the time in cells? No, I wouldn't say that has no use. I'm kind of more asking how useful it would be in the context of a machine learning model. That's a question in Discord here. Now, I think that as a retail trader, having a depth in cells is useful. Hold on. So first of all, you notice that Lucas originally said recon tape, because what happens is the fills that you get, it only shows the limit orders being filled and not the market orders being reconstructed. So you need a reconstructed tape first, like one of these, right? And yeah, so what it does is it comes in and it says, okay, I got a bunch of fills, but then I only got one corresponding level 2 change for that, because those fills were all filled by the same market order, right? So that's how it's able to come in and say, actually, that order was 1,000 lots or whatever the deal was, right? Okay, so once you have a reconstructed tape, so I have mine set up where, you know, they only show for a certain amount of time, and then it you know, they come off the bottom like that, right? It gives you kind of a good sense of like the pace of the orders, like, because one of the key things that you got to be looking for, especially if you're scalping, is like, what is the pace of the orders, and like, what are the chances that I'm actually going to get filled on this side? If there's 1,000 lots in front of me, you know, and we're only having like 200 lots a minute, then you're not going to get filled, right? But if there's 1,000 lots in front of me and we're trading like 10,000 lots a minute, then very likely then I'm going to get filled on both sides, right? And then I might be able to sort out that this is a place where they're going to get stuck and I can find something on both sides of it, right? It will also highlight to you large market orders, because when you get remember, when you get a large market order comes in, when price is cleared aggressively, it makes it easier to clear that price because there's no liquidity there anymore, right? And so if, you know, like we just had an iceberg there at 17.5, you know, we've already kind of been stuck in a range that could cause us to continue trading there for a while. I think in this situation, they probably could manage another leg if they wanted to, but they're unlikely to. The market's probably going to wait until McCarthy talks, right? So if I was continuing to trade, I think that I would be sitting here with a bid at 17 and an offer at 17.5. On the theory that if I'm lucky enough to get filled there, it should be really easy for me to get filled at 17.5 because they exhausted all the liquidity there, right? So seeing those big orders can be useful, those sorts of things. But you're right that, like, you know, it's kind of questionable how much informational content you can actually derive from some of these things. You know, one of the things that I find over and over again is that when you look at the empirically proven stylized behaviors of markets, they definitely give you information that you can use to inform your trades, but they're not like what a retail trader expects in terms of like, okay, when you see this pattern, then you buy here and you sell here. It's not that simple, right? The things that they're telling you are like much more limited things, like now is probably not a good time for a trade, or price is unlikely to move very far in the near future, right? How can you make money off of that? I mean, you can maybe scalp that range, right? So what it does, but it still ends up being like really key pieces of information. And when you combine those together with an informational inefficiency that you have, like knowledge of future order flows, breaking news, et cetera, then it ends up being like a really powerful framework, right? You know, so like when it comes down to like making a machine learning model, what would be really interesting is if you were able to get your hands on proprietary data from like one of the big banks to be able to sort out what the flows have been historically and pass that into a machine learning model and let the machine learning model find patterns in those flows that it can exploit, right? And that's probably what those hedge funds that are consistently making money are doing. I mean, we don't know for sure because they don't tell us, but I think that's what they're doing. And I kind of want to try it myself, to make a model that will come in every day and it will tell us, here's what the expected flows are. And, you know, if the expected flows is, or it wouldn't just be like, here's the expected flows, like here's how much of an imbalance it is. And here's my, here's the likelihood of it, right? And then I can utilize that information to identify times where the flows are really skewed to one direction and I want to take a trade on it, right? Instead of having to do it by feel, I can do it in a quantitative way. That'd be perfect, right? Or maybe we could just, you know, take the data that you get that Goldman and other analysts regularly post and build a model from those. Well, kind of funny, as I'm talking about that, price is starting to dip a little bit. S&P 500's not backing off of selling either. It's kind of a tough day. I mean, I think we made a good call on realizing quite early on that it was just going to be a tight day. Yeah. I think I was going to say something else there, but I forgot. Oh, you know what, though? I got to get going, guys. It's time for me to go. So I will see you tomorrow. In the meantime, stay excellent, team.